The warning. You know something strange is happening when the greatest investor in modern history stops buying. Not a small investor, not a scared investor. I'm talking about Warren Buffett. The man who became a billionaire by buying fear is now sitting on nearly $397 billion in cash. Think about that. That's more money than entire countries produce in a year. And instead of investing it, he's parking it in safe US Treasury bills, earning billions while doing absolutely nothing. Now, here's why this matters. Buffett has only built a defensive cash pile this large twice before. Once before the dot-com crash, and once before the 2008 financial crisis. Both times, people laughed at him. They called him old, outdated, finished, and both times, the market collapsed shortly after. So now the question becomes, why is the smartest long term investor alive suddenly acting this defensive again? Because Buffett doesn't panic. He waits, quietly, patiently. And when everyone else gets greedy, that's usually when he becomes cautious. By the end of 2023, Berkshire Hathaway had around $168 billion in cash. Then suddenly, 334 billion, then 373 billion, and now $397 billion. Almost one third of Berkshire's assets are now sitting in cash. That is not normal. That is strategic. And the way Buffett built this mountain of cash is even more shocking. He started selling, slowly, methodically, quarter after quarter. He cut down his massive Apple position by roughly 75%. Then he slashed his holdings in Bank of America nearly in half. For almost 3 straight years, Buffett has been a net seller of stocks. And that tells us something important. Buffett is not holding cash because he's scared. He's holding cash because he believes prices no longer make sense. Playing with fire. Back in 1999, the world believed technology stocks could only go higher. Internet companies with no profits were becoming worth billions overnight. Everybody looked like a genius, except Buffett. While tech stocks exploded upward, Berkshire Hathaway badly underperformed. The media mocked him constantly. One famous headline literally asked, "What's wrong with Warren Buffett?" People thought he had missed the future, but Buffett looked at the market and saw danger. He warned investors that valuations had become insane. He said people were playing with fire. Nobody listened. Then came the crash. The Nasdaq collapsed nearly 77%. Trillions of dollars disappeared. And suddenly, Buffett didn't look stupid anymore. He looked early. Then history repeated itself before 2008, years before the financial crisis. Buffett warned about dangerous levels of risk in the financial system. He even called derivatives financial weapons of mass destruction. Again, people ignored him. Again, markets kept rising. Again, Buffett quietly built cash. Then 2008 arrived. Banks collapsed. Fear exploded everywhere. And while everyone else was desperate for liquidity, Buffett became the buyer of last resort. He made legendary deals with companies like Goldman Sachs and General Electric, deals that later made Berkshire billions. Why? Because when everyone else panicked, Buffett had cash. And cash during a crisis is power. What Buffett sees right now. Now look at today's market. The Buffett Indicator, his favorite valuation metric, is sitting near the highest level ever recorded, higher than the level he warned about before the dot-com crash. The S&P 500 is near all-time highs. Tech companies are trading at massive valuations. Some sectors are trading at 50, 60, even 70 times earnings. That is extreme, and maybe the biggest signal of all, Buffett even stopped buying back Berkshire Hathaway's own stock. Think about how crazy that is. This is a man who understands Berkshire better than anyone alive, and even he thinks it's overvalued. That should make people pause, because Buffett is not saying the economy will collapse tomorrow. He's saying something more important. The risk is no longer worth the price. And honestly, that might be the biggest warning of all. Here's what most investors still don't understand: this cash pile is not dead money anymore. Years ago, holding cash earned almost nothing. But today, short term treasury bills are paying around 3.7%. That means Buffett's massive cash position is generating over $12 billion every single year, risk free, without stress, without volatility, without panic. So Buffett no longer needs to chase overpriced stocks. He can simply wait patiently, comfortably for the next big opportunity. And history says those opportunities always come eventually. That's the lesson most retail investors ignore during bull markets. They believe crashes are impossible right before they happen. Maybe Buffett is early again. Maybe markets continue higher for another year. That's possible. But Buffett doesn't care about being early. He cares about being prepared. And right now, the greatest investor alive is preparing for something. Not with predictions, not with headlines, but with nearly $400 billion in cash. So, no, this doesn't mean you should panic and sell everything, but it does mean one thing: risk matters again, patience matters again, and having cash ready for future opportunities might become the smartest move of this entire cycle. Because when panic finally returns, most people will freeze. But the investors with liquidity, they'll have options. And that's exactly what Warren Buffett is building right now: options, power, patience, the same formula that made him one of the richest investors in history.